Hello traders, and I hope that you're doing well, and I hope that you are all keeping safe. So in this video we are going to talk about this post. So this was a doesn't make sense post that I sent this week this week. So here was obviously the screenshot of me explaining it in the weekly outlook video on Monday, and then that's where we took the trade. And I'm actually still in this trade. It's taking forever, but it's still moving. I've got no reason to close. And what I'm going to go through is I'm going to go through a series of screenshots that I've sent and give you a video representation of basically what each screenshot says, and try to give you a better explanation as to why I took this trade. So let's take away this. Alright, so let's start off from so where I saw the POI. It was something like this. It was, yeah, roughly about there. So the first screenshot was this one. So let's try and digest as to what's going on. So for the first part is the fact that we've broken structure, right? So the first break of structure, and for us that is our major structure. Let's do this in black. Okay, so we have our breaker structure. Now, what you see is the high being called intent, right? So I'll label this all out exactly the same as we go and try to explain every single part. So what this essentially means is the fact that we just broken structure. So if you watched the previous videos, you obviously would know that, you know, breaker structure is potential, and is showing you a potential intention of a change in trend, because Euro GBP, I was about to say EG then, but Euro GBP is very bearish at present, right? Now, even with the Vertex model, this is not bullish yet. However, we can turn a low probability situation, low probability setup into a high probability one using the Vertex method, right? Which is why we're able to follow this sort of intention, right? Now, with that being said, what we can see is the origin of that move that created that intent, right? So we've got this area of interest to look to go long. So what this means, right? What this essentially means is that we have created, and I think this was the next screenshot to be fair, but we've created our range high and our range low in this situation, right? So we now have our solidified low, and now we have a solidified high, right? So this is our trading range. Now this trading range, I think, is about 250 pips. Yeah, so 250 pips, right? Now at this point, if we're going to wait for our POI, we're going to wait 200 pips for price to come back to this POI. Okay, now with going so obviously if we are looking for shorts, right? So at this point we're still looking for it's still pro trend. However, this is the area of interest. This is where we need to be cautious of any sells that we are in at this point, right? So that's one thing to sort of pay attention to. But allowing, because it's a 200 pip range, and obviously because the trend being bullish is not confirmed for us using the Vertex model, this for us to wait 200 pips for price to come here, for it just to violate and continue being bearish, it's just going to be a waste of time, right? So we're not just going to sit on our hands in this point, right? What else was on here? So another thing we need to understand is, so we create this low, right? Now bear in mind, when you have a trend, say for a bullish trend, right, we have higher highs, right, and higher lows. Okay, you need to have them alternative, right? You need to have a higher high, then a higher low, higher high, higher low, because you need to create new highs each time, and your lows cannot be broken. Once your lows are broken, and that is when you need to be alert, right? So that's something that you should have learned from the previous videos. So in this case, what we can see is obviously we have this breaker structure, right? And it's created a new high. Now this could potentially be the high low, but it's not confirmed yet because we need to have a higher high. Okay, but what is actually happening in this situation is price is struggling to push higher. Okay, now with that struggle to push higher, it's obviously telling us it's not ready to. Now this is based on assumption, by the way. It gives us the assumption that price is not ready to go higher just yet. Okay, which gives us more reason and more cause for price to come to our POI. Not only that, it's creating relatively equal highs. However, with equal highs, you sort of have to be a little bit subjective. Well, it is subjective, but because this little wick has gone above, can say it's grab liquidity, but it's still, I would still say it's relatively equal in terms of the highs, right? Let me get rid of that. So we know the intention. Another thing I mentioned was to follow the momentum. Now the quick way just to see the momentum, obviously you can count the candles, right? Count the candle between the range from, like, say, this high to this low, and then from this low to that high range, right? The quick way to see it is look at the steepness in price like this. Okay, this is, to be fair, this is fairly steep from this. That was a very bad line, but this is fairly steep. But if you compare this to this, okay, that is more vertical than that, and that shows you where the momentum, not vertical, horizontal, sorry, apologies, I just had a coughing fit. So in this situation, right, we can see that the momentum in this case is obviously bullish, right? So it gives us that extra confluence as well, that this is a strong POI looking to go for longs, right? Let me get rid of that. So in this situation, what do? Okay, we can only follow our intraday price and see what's going to go on from here. Okay, let's go to the next screenshot. So what is going on here? So in this case, so remember, this is our trading range. This is our range high and this is our range low. So this is our solidified low, solidified high. Then we create this intermediate low, right? Or this, let's call it the mid-range low, whatever you want to call it, right? We have a break of that structure here. So this is going to be our minor structure break, and that's what MBOS stands for on the screenshot. So let's go from there. Let's put that in. Alright, so let's put that in there. So that's our minor breaker structure. As we can see, it's labeled here. So from here, right, what we can see is we have another intention. Now this intention is not our major intention. So that's one thing that we need to remember at this point, because we're still looking to, obviously, our higher time frame perspective is ideally we want to look to go long, given the size of this intention and the size of this impulse, right? But we can't ignore the fact that we've just broken minor structure and price obviously is continuing to go down. We know we want to buy from here, right? We know it. Okay, that's our assumption that price can come and react to. If it doesn't, it doesn't. If it does, it does. Okay, we won't know until price gets there. What we can see from this perspective now, we've got a breaker structure. Where did that originate from? Now this obviously is the last bullish candle before the bearish move. So we have this area of interest now. Okay, simple as that. So now we have our minor intention. Okay, as we can see here, and we've got our clear POI as labeled. Right, so let's move on to the next one. So what actually happens? So now that we actually have our POI, we need to wait for price to actually get there. So let's get price there. Sorry, that went too far. Let's go here. So in this perspective, what we can see now, price is tapped in. Now at this point, we'll have our alert and it'll go off at this point. We had two POIs, right, on the hourly. Okay, we had two valid POIs. But the POI that I reacted of was the first one. So let me mark out both of them. So we have one here and we have one here, because technically that was the last one before the structure break. But anyway, let me bring this out. Now the key thing that to notice on this screenshot, I think it was this one, yeah. So the key thing to notice on this one is the wick mitigation. Now remember one thing that I've always said, one thing that I mentioned in the Telegram on all the doesn't make sense posts is follow the mitigations, right? What we can see is that we actually now have, let me go from here. So at this point we now have this mitigation point, and you need to think, when the price gets to your POI, you need to ask yourself, does it make sense for price to react to it? Now the only way that it will make sense is if it's mitigating something, whether it's an OB or if it's just clearing inefficiency or imbalance, whatever you want to call it, right? If it is, then it makes sense. So let me mark this out, and I'll explain why it's a good idea to mark out your mitigations. Well, it's a good habit to get into, unless you're very good at eyeballing it. So in this situation, I'll use the red one. So now that we've got created this mitigation, right, we want to study the reaction, which is exactly what it says here. Let me get rid of the ones that I've used so I don't get confused. So we're going to study the reaction from here, because obviously price can obviously go up and react from here if it wanted to. That is a higher volume candle for price to react of. So it would make sense if price does go up there, because that can simply be an inducement and price can just react here, right? We don't know, but this is still the whole daily POI that we had established from the first sight of this trade, right? Because look how big the daily POI is. Like we're still within that, so it's still valid at that point. Right, so now that we have our hourly wick mitigation, right, our point of invalidation now sits at this point. So that's what IMV stands for. I don't know if I put IMV or did I put invalidation. I didn't even label that. Sorry. So that should have been. I should have had invalidation point at this point. Now, I missed the initial reaction, which is fine. And the key thing from that post is you need to understand. You need to understand the fact that if you miss the first trade, if you miss the first opportunity, it doesn't matter, because opportunities will arise again and they're just around the corner, right? Now, we need to study the reaction. So let me play this out just a little bit. Oh, sorry, I went too far. Let's go here. So this is where I got to, and this is where I started looking for the trade, okay? So what we can see is we have a break structure, right? Now this is also, sorry, let me do that. I'm quite picky with my colors, sorry. So we have our breaker structure here. Now we need to think what's actually happening. So at this point, okay, price is obviously bullish on this time frame, right? If price was to continue bullish, it should have reacted from here, okay? Which it hasn't. It's disrupted, which means that order flow, okay, bullish order flow has just been fractured, okay? So now this is possibly, when you're looking at this point, if you obviously didn't see what's happening here, right? This is potentially the first sign, and this is also intention that order flow is switching, okay, or transitioning, however you wish to call it. Now, we need to understand that for it to switch, we also need to have bearish order flow to be respected. And essentially how you do that is, you need to follow the mitigations. So our invalidation points here, right? What we can see is efficient, inefficient pricing, okay? So what we can see is that also this was obviously the last bullish candle before the bearish move. Okay, this was obviously violated, right? What we can see is, if we get rid of my lines, sorry, if we get rid of that, we can see this clear imbalance and there's a clear POI that's sitting here, okay? And what we can see is this was respected, okay? This was respected, which means that it was a nicely mitigated and price continued. Then what we can see is that price is struggling to push higher, so it's given us a bit more of a reason to start looking for shorts. Because when the main thing to sort of see is when you get to a POI, you want to look for an excuse to go into the direction that you have chosen, okay? But you can't just pick a direction and then try to find excuses. You still need to have the valid reason to do so. But once you have your POIs, you need to think about, you need to find that excuse, right? What else did I miss out? So I've explained the mitigation, as we can see here. So now we've mitigated this POI, which is here. Our new point of validation is now above here. Okay, why? Because that's the last mitigation point for bearish order flow. And what we can see is, obviously, as mentioned, we can see the reluctance in price to push higher. And then following that, we have, and I forgot to mention, we have our solidified low now and our solidified high at that point. Now we've broken structure, right? We've broken our major structure point. I don't know why I did that there. So we've broken our structure point here, okay? We could have, if we wanted to, we could have got a trade in at this point, but I wasn't alert, and to be fair, that was quite late in the evening for me. I wouldn't have traded that, so that was about I think it's about 8 o'clock, 7 o'clock, something like that. Yeah, about 8 o'clock, yeah, for that. So I wouldn't have traded that at that point. I would ideally like to have traded that around London, which is exactly what I did. So what I did is when I woke up, I obviously saw this breaker structure, as we can see here. And again, let me make that into a black line. So the red lines indicate the mitigation points. Okay, so what we can see, which is, this is what the interesting part is, this wick, okay? Now, the key thing to remember and the key thing to think about is you need to understand what is happening in a candle, right? Which is what I show on this one. Okay, you need to think about where price is being driven from. Where did this impulsive move get driven from, right? And also we need to think what's happening to the left, okay? So when you get a wick, right, obviously at this point the buyers are getting exhausted at this high to create this high, this candle, right? And then this is where the sellers are introduced into the market to create this bearish move. So the assumption is the fact that price was originating from here, from that wick, okay? There's a POI within here. That is the assumption, okay? Now, if we look what's actually happened to the left, we can assume that this has mitigated something. We can assume, okay, we've got our invalidation points here. And this is something that I didn't mention, I don't think. Yeah, I don't think I mentioned it. No, I didn't mention it in the screenshot. But we can assume that this has mitigated something here, because this, what we can see is obviously this is probably broken some sort of scalp structure, right? Or some sort of minor lower time frame structure, whatever that was, okay? That's been mitigated. So we can assume that that's been cleared, okay, at that point. So with that being said, we've got no reason for price to go any higher than that, but we still have our invalidation point here. The reason why I'm not saying this, we have an invalidation point above here, is purely because for me it's not a major time frame mitigation for me to assume that there's nothing else above it. So I'm going to say that this was the ideal major mitigation that I would like to focus on, and I'll have this as my invalidation points for bearish order flow. Okay, now that we've got this interesting wick, we can obviously look inside it. So if you look inside, we've got this clear 5-minute OB, and then if I go even further, this is the one I went off. So that is where the trade was taken off. So at this point, that is where I placed my order. Where is it? There. So that's where I placed my order. And something that I mentioned was obviously our invalidation point is here. So at this point, if you want to put your stop loss above here, that is conservative and that is a safer option. So in terms of win rate, your win rate will increase massively if you were to focus on your points of invalidation by simply following the mitigation. That's all you have to do. If you put your stop loss above them, or clear them, it has more logic behind your stop loss. Whereas I took a bit more of an aggressive approach. I mean, for me, it was a 2-pip stop loss anyway, so for me that was fine. I don't know how big the stop loss would have been above if it was conservative. You could have had a 4-pip stop, to be fair, if you wanted to, or even a 5-pip to include for spread. Spread on this pair is pretty good anyway. Yeah, so say a 5-pip stop loss. So that, again, that would have been fine. It all depends on your risk appetite. I was happy to use the 1-minute OB. However, I would say that I was very lucky, because what actually happened is we obviously had a liquidity grab at this point. The reason why I'm saying liquidity grab is because of the impulsive nature following it. So I would say I was somewhat, or if not fair, I was lucky on this trade. But in terms of logic, it makes sense. Okay, it made sense. And then price is continued. And an interesting part, and I hope that if you followed from that post, because I think the last post was when price was here at this point. The key part to think about, what I'm going to speak about now, is order flow maintenance, because I could close all these now. So at this point, hold on a sec, let me play this out to where it was. So if you're thinking about order flow maintenance, actually let me cross this out and go here. So if we're thinking about the maintenance of order flow, what we can see is following the mitigation. So when we obviously had this clear breaker structure, because in terms of the hourly range, there's our hourly range, right? We had a breaker structure, then we had this respect. Now in terms of this, right, what we can see is because we have this sort of ranging period here, this, and then we have this random up move. It seemed to have mitigated something. I don't know what it is. Something on the lower time frame, I believe, and then we had a move down. But we still got this valid hourly POI, which price is respected and then continued, right? Continued to break structure, right? So that's the last point of mitigation, okay? So from this point of view, what we would think about is where price is going to go to next. And it's probably clear in the 4-hour time frame. What we can see is, and the reason why I'm mentioning this is because some of you who've messaged me about it have actually taken this on board. Is if we're looking at the terms of mitigation, so we've got a mitigation point, and I'm going to use a cleaner line anyway. Okay, so that's where order flow has been maintained. That's our new point of invalidation, and what we can see is price has just respected another POI. It's grabbed liquidity, I would say, and then obviously continued to break structure. But in terms of validation point, it hasn't disrupted order flow at all at this point, because the point of mitigation is still here. So our invalidation point is still here. Okay, that is just a POI for price to come to, and we need to be aware of the fact that price can grab liquidity. Not even that, obviously grab liquidity from here, right, from that high. But what we need to think about is this. We need to think that this wick, as obviously the point of mitigation, has probably mitigated something within here. Okay, that's what it's reacted of, and you need to think is, does it make sense for price to react where it has for you to even bother studying the reaction? I personally got an entry point somewhere here, but I got taken out of break even. I might post that somewhere. Yeah, I might post that somewhere where you can see the entry point. I had a 1 pip stop loss, and unfortunately it went back to break even. I think it went to like 7 or 8R, and I wasn't aware to take any partials. Normally I take partials around 10R anyway, but yeah, I just couldn't. So I got taken out of break even, but I'm still in the overall trade anyway. But you can't assume that price has violated the POI because price has violated your OB or SC or whatever you want to call that candle. Because you need to think about the points of invalidation, and our points of invalidation is still here. So once it disrupts that, then you need to think about, price is probably changing in structure and order flow. So now at this point, what we're assuming is obviously we have this 4-hour low. We need to have this to be broken, and then we can continue order flow to continue, because that is the last point of mitigation. So in theory, if you break structure, we should expect price to come back to here and continue. But we also have potentially have a reaction point here, so it can react to either one of these two. So that's something to look at for the following week or so, and it'd be interesting to see if that actually does play out. But obviously our POI, our entry, well, not POI, our target, first main target is going to be this daily POI. I'm not going to close the trade fully. I'm going to see if price reacts to it, because as I said, price is not confirmed to be bullish for us in the Vertex model. So I cannot say that price is going to react from here definitely. And to be fair, we'll never know that anyway, but it's just an assumption based on the intention that market has shown us. It's just an area of interest for us to look for to see if we get a change in trend in that. But because I've taken majority of my volume off, I've only got 0.25 of my risk on this trade. So to be honest, I'm not overly fussed what happens. It'll probably get to the point, if it is taking too long to get there, it'll get to the point where the swaps and the charges are getting too much, and it's probably not worth even holding anymore, because it's moved quite slowly. But that's something to pay attention to, and I hope that has explained what's been said on each of these screenshots and given you a better insight as to mitigations, because that's something that I've seen in the comments quite a lot as to how to explain the mitigations. Another thing to pay attention to actually, when you get your POI, in terms of mitigation, it can mitigate the open, but if it doesn't and it can react off, you can get like a small reaction, but you still need to bear in mind that 50% can still be reacted, because inside your POI you probably have more POIs with imbalance still sitting within that. So just be wary of that. So in terms of understanding your invalidation points will help you be a bit more reassured of why price is going to where it is. Because say for example, say if you just took this trade based off the 4 hour, right? Say if you took it and you had your stop loss above the invalidation point here, and say you got an entry point at this open, okay, just say this, and you had somewhat reaction prices going on, then at this point, because price is coming back in to your POI, you'll be sitting at drawdown at this point. Some will start panicking. It doesn't matter what time frame you're on, by the way. This is just a hypothetical situation I'm trying to explain. If you're in the situation where price is going into drawdown, you still need to understand that your point invalidation is here, so you're safe. So that's why your stop loss, understanding your invalidation points and understanding where you put your stop loss, it'll help calm you down a lot more, because you have that security and you have that understanding as to where price needs to go to fail your setup at that point. But yeah, so I think I've spoken enough in this video, and I hope that it was clear, and I hope that it makes sense as to what you're looking at inside into the Telegram, and what I've explained today. And if you compare these screenshots compared to all the others, you'll realize that the process is exactly the same. I mean, all of this that I've just explained is all within the Vertex method in a rule-based manner. So although I've explained all that, it's not something that I actively need to think about because of the manner and the methodology that we teach at Vertex. So I don't know why I'm clearing this in front of you guys. To be fair, I like to have it clear. But yeah, so it's not something that we think about actively because it's all put into our rule-based method. But everything that you see is all encapsulated in our strategy. But I hope this video has given you a better insight as to your invalidation points, mitigations, and following what you see. But for now, guys, I hope that you had a great weekend, and I hope that you have a good week to come, and take care and trade safe.